when you look at some of these tech giants, is the risk more to the downside at this point, given the valuations that we have seen in the last 6 months?
Yes, I think the risk to the downside, Sonali, sits in the latter part of your question. I don't think the risk to the downside is around the actual absolute earnings performance. And for big tech, it's actually been pretty strong if you look at the last couple of quarters, especially on the cost-cutting side. What I fear is that priced into the valuations we see in big tech at the moment are expectations around, for example, generative AI delivering measurable, monetized contribution to the bottom line. And I just don't think that a lot of the big tech companies can point to hard numbers justifying the AI euphoria that we've seen over the last 4 to 5 months. So that's my concern, not the earnings dollars or the earnings trajectory, but the expectations being set far too high relative to where trading and those deliverables could be right now.
And because you do like the AI sector here, and you have said so much about Amazon already, outside of Amazon, is there anything you like, especially where valuations have run?
Well, I think Alphabet's got its work cut out for it. It really needs to show some progress on generative AI, really sort of pushing in and delivering both efficiencies, seeing that come through on the margin side, and understanding how they can follow in the footsteps of Microsoft, that's been pretty savvy and pretty explicit about how they're going to price their AI offering to their consumers. I think another piece that's sort of buried in this a little bit, Sonali, and where I'd be looking out for this on the earnings calls, if it's not necessarily in the headlines, is a lot of these players have been trying to move and partner with the likes of Disney, the likes of others, to try and figure out a way to move more aggressively into using AI for ad tech, for advertising technology. Again, something touched on by Netflix. That's a theme I think we're going to hear get louder and louder and louder with the likes of Amazon to go back to as it talks about the ad platform that's sitting inside its content business.
I want to start with AI because it seems to be the buzzword of everything. When we were here last year, we were talking about AI, but it was unclear, I think, completely where Amazon was going to play in this AI world. And you now say it is going to change everything, and that you have really almost shifted the whole company towards AI in almost every space now.
Yeah, well, we've been saying it for a while, and I do think that AI is going to transform every customer experience that we know. And, I think a lot of the discussion has been around applications and starting really with ChatGPT, which really caught people's attention. But we think there are 3 big macro areas of the generative AI stack, each of which are gigantic and each of which we're investing deeply in. And, I think of it as at the lowest layer are for people that are building their own large language models. And the 2 things that really matter there is the compute to train the model and to run the predictions of the inferences. And what matters in that is the chip. Right. And then the services that you have to actually build models. And we've got very significant investments there. Most of the early AI models have been built by NVIDIA, but supply is more scarce and people are concerned about cost. And so we've built our own custom silicon in AI. We've built a training chip called Trainium and an inference chip called Inferentia that are meaningfully more price performant than what you can find out there. So a lot of the training, a lot of the predictions are going to be done on those chips. And, and then I would say at that middle layer of the stack are for people that are going to actually leverage somebody else's model, but customize it with their own data and then use our features to make it easy as a service. And we built the service called Bedrock. And a lot of the generative AI applications are being built on top of Bedrock because it's the easiest way to build a high-quality generative AI application.
Something big is on the way for Amazon, and only a few investors realize this. According to analysts, Amazon currently enjoys a unique strategic position, a position that could potentially make it one of top winners in the generative AI race. Interestingly, Amazon is keying into this technology and making a new move that could have a ripple effect that will shake up both its business and the future of AI as a whole. So, what exactly is going on? And is it time to buy Amazon stock? Let's find out. But before we do that, if you want to keep up with Amazon's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Let's talk about large language models because there's just so much focus on it. You have now made investments in Anthropic, which Google has also made an investment in. You're building your own large language model called Olympus. How are you thinking about investing in things like an Anthropic versus trying to build your own?
Well, I think the one thing that we've seen pretty consistently in this relatively early stage of generative AI is that customers want choice. You know, they're learning how to build models. They want different model types for different types of applications and use cases. They want different model sizes because it changes the latency and the cost structure. And so, you know, part of the attraction for so many people of Bedrock, I was just mentioning, is just it has the largest selection of models available. It's got not only models that we build, but also Anthropic and Meta with Llama 2 and Mistral and Cohere and Stability AI. So you have a lot of choices. And then Bedrock makes it really simple to move between models and move between model sizes so that you can actually experiment and get the right quality and latency. We're going to, for us, and we see it with our own, we're building dozens of generative AI applications right now, some of which are launched, others are in development. We find it with our own model builders and our own application builders that sometimes they want to use our own models, sometimes they want to use third-party models, and we're going to give people choice so they can make those decisions.
How important, though, is it for you to catch up on having your own generative AI large language model? Meaning this Olympus project, which has been reported on, how important is that? How far behind do you think you are? What do you have to do to get that to the same level as where Anthropic may very well be or where you believe OpenAI is today?
Well, I mean, first of all, what I would tell you is that this is going to transform virtually every experience we know. It's a gigantic space, and there are going to be a lot of very successful players in it. And if you go talk to enterprises or companies that are using generative AI, they are very excited about what we're building, and more customers are moving to our services. And you know, we're going to have partnerships. We have a very deep partnership with Anthropic. Claude 3, which they released just a few weeks ago, is the best model on the planet right now with the best performance, and it runs, you know, best on top of AWS. And so our customers are very excited about that. But at the same time, we have a lot of experience building models at the company. We've been doing it for a long time, and we've been building our own models, and these Titan models we have. We're going to keep building those, and we're going to give people choice.
Needham Bank analyst Laura Martin recently said that Amazon could be on its way to winning big with AI. According to her, Amazon enjoys a very strategic position when it comes to generative AI because it's developing generative AI chips to train and drive better inferences from large language models. Not only that, Amazon also has the widest variety of choices related to large language models. Since digital markets have winner-take-most economics, Martin is optimistic that Amazon will be one of the top 3 winners in the generative AI race. She also said that Amazon has the ability to outperform other stocks as long as it continues to drive upside to its OIBDA and free cash flow estimates. In today's video, we're going to dive deep and explore how Amazon's AI chips could have a giant impact on the company's business model and explore Martin's expectations for the stock, and whether she thinks it's a buy right now or not.
As rate cut bets shift, so have moves in one sector in particular. Shares of AMD and Intel both down over 15% in the last 30 days. The Philadelphia Semiconductor Index, also known as SOX, dropping over 10% from recent highs. Despite a higher rate environment, our next guest is still bullish on the sector. Matt Bryson, Wedbush Enterprise Hardware Analyst, joins us now. Matt, thanks so much for taking the time here. Walk us through your thesis here, especially given some of the pullback that we've seen recently.
Yeah, so I think what we've seen over the last year or so is that the growth of generative AI has fueled the chip stocks, and the expectation that AI is going to shift kind of everything and the way that technology works. And I think that at the end of the day, that thesis will prove out. I think the question is really timing. But the investments that we've seen that have lifted NVIDIA, that have lifted AMD, that have lifted the chip sector in general, the large cloud service providers building out data centers, I don't think anything has changed there in the near term. So when I speak to OEMs who are making AI servers, when I speak to cloud service providers, there is still significant investment going on in that space. That investment is slated to continue certainly into 2025. And I think as long as there is this substantial investment, that we will see chip names report strong numbers and guide for strong growth.
Matt, when it comes to the fact that we are in this macroeconomic environment right now, likelihood that rates will be higher for longer here, at least when you take a look at the expectations, especially following some of the commentary that we got from Fed officials this week. What does that signal more broadly for the AI trade? Meaning, is there reason to be a bit more cautious in this higher for longer rate environment, at least in the near term?
Yeah, so I mean, I think certainly from a market perspective, high interest rates weigh on the market, right? Eventually, they weigh on consumer spending. Certainly, for a lot of the chip names, they're high multiple stocks. So when you think about where there can be more of a reaction or a negative reaction to high interest rates, certainly it has some impact on those names. But in terms of again, AI changing the fundamental landscape for tech, I don't think that high interest rates or low interest rates will change that. Right. So when you think about Microsoft, Amazon, all of those large data center operators looking at AI potentially changing the landscape forever and wanting to make a bet on AI to make sure that they don't miss that change, I don't think whether interest rates are low or high are going to really affect their investment. I think they're going to go ahead and invest because no one wants to be the guy that missed the next technology.
Laura Martin raised her fiscal 2024 profit estimates for Amazon based on CEO Andy Jassy's shareholder letter, promising more cost-cutting at Amazon's inbound fulfillment architecture and inventory placement during fiscal 2024. Additionally, the analyst expects fiscal 2023's cost-cutting actions to drive margin expansion throughout fiscal 2024. As for her expectations for the first quarter of 2024, Martin maintained her revenue estimate at $141.5 billion, and for fiscal 2024, the analyst maintained her revenue estimate at $636.9 billion. She also maintained her revenue estimate at $713.4 billion for fiscal 2025. Notably, Martin gave Amazon stock a buy rating and a price target of $205, an upside of around 14% from where the stock is trading at the time of this video. So, why is this analyst so bullish, and how can Amazon use AI to its advantage? Let's explore. Hello everyone, and welcome back to Investocracy. Earlier this month, Amazon's CEO, Andy Jassy, made some interesting comments in an annual letter to shareholders, noting that Amazon has made meaningful progress in its financial measures and sees considerable upside in each of the businesses in which it's investing. According to Jassy, Amazon views generative AI as a key foundational element of delivering better customer experiences and plans to deepen its investments in the technology. He also characterized generative AI as a building block that would serve as a foundation for new products and services. And that wasn't everything. In fact, Amazon disclosed recently that Andrew Ng, the founder of several AI businesses and a managing general partner at the AI Fund, is joining the company's board of directors. The company noted that Ng will help the board recognize the opportunities and challenges that AI presents, as well as its transformative social and business potential. To sum up, Amazon has pretty much revolutionized the way we shop, and now they're about to revolutionize their entire business by something way bigger. Let's find out what that is. But before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Amazon. That said, back to the video. If you're an investor in any big tech stock, you'd know that large language models are the brains behind things like chatbots, and training this AI requires some serious computing capacity. To get that computing capacity, companies invested in AI chips, and a really popular AI chip is NVIDIA's H100, which Amazon buys. But the online retailer knows that it's not viable to depend on NVIDIA forever, especially since the H100 demand is so high, making the chips hard to get. So, Amazon started making its own custom-designed generative AI chips, and now it has two called Trainium and Inferentia. Trainium is used for training large language models, with its biggest strengths being speed and efficiency. Inferentia, on the other hand, is all about putting those trained AIs to work, so it is optimized for running models smoothly. With its own chips, Amazon can potentially offer its cloud computing service, AWS, a significant edge and reduce its dependence on companies like NVIDIA. So, Amazon's diving headfirst into generative AI, but how exactly does this translate into a win for the retail giant? Let's unpack this. For starters, generative AI can improve Amazon's internal operations greatly. We all know Amazon loves efficiency, so generative AI could be used to automate tasks like product description writing, generating marketing copy, or even personalizing recommendations for customers. Speaking of recommendations, AI could also be used to recommend personalized ads and products to Amazon users, which would definitely boost the company's advertising revenues and improve customer satisfaction. Another big area is Amazon's cloud computing service, AWS. Amazon is a cloud powerhouse, and businesses of all sizes rent computing power from it to run their operations. With the company's generative AI chips offering faster and cheaper large language model training and inference, AWS becomes even more attractive to other businesses. There's also Amazon's strategic AI partnership with Anthropic. In March, Amazon announced that it invested an additional $2.75 billion in the AI startup, completing a $4 billion deal from late last year. Anthropic is the developer of the chatbot Claude, which helps Amazon compete against OpenAI's ChatGPT, which launched the generative AI craze late in 2022. Notably, after Amazon announced the deal, Bank of America securities analyst Justin Post wrote that it could help narrow the perception gap that Amazon has with Microsoft, the tech giant whose Azure service is the #2 cloud computing provider behind AWS. Competition is extremely tough, and Microsoft and Google both recorded faster overall growth for their cloud businesses in Q4 of last year. So, the battle for Amazon to defend its title of Cloud King bears watching for investors. The company's Prime service also faces competition from retailers like Walmart and Target, who also launched their own subscription services. So, Amazon needs to offer better deals to its customers in order to fend off the competition.
I'm Romaine Bostick alongside Scarlett Fu. 10 minutes, Scarlett, until we get to those closing bells. And, well, unless this market turns around in the next 10 minutes, it's going to end pretty much with a whimper.
Absolutely. Another day, another decline. This is 6 straight days of losses for the S&P 500. It's now below 5,000. And, of course, the big reason why is because technology shares, whether it's the Magnificent Seven, whether it's Netflix, they're all tumbling right now ahead of big earnings for some of those big companies. Do we put it on TSMC and its outlook earlier this week, or do we pin it on Netflix saying it's no longer going to give subscription numbers?
I think a little bit of both. Of course, Taiwan Semi really trying to temper some of the outlook for buy investors. We heard something similar from ASML, seeing the slowdown in orders and some of those high valuations that we've seen on names like Supermicro, NVIDIA, and others, now causing investors to maybe take some chips off the table. NVIDIA shares right now down 10% as we march to the close. Tom Giles, Bloomberg Senior Executive Editor for Technology, joining us right now. And Tom, it's not just NVIDIA. Basically, you look at anything that had been linked to AI here, and they all seem to be under pressure. What's happening?
There have been so many pent-up expectations for this for these stocks. There's a lot of bullishness for AI. Anything associated with AI, even if you just mention it on a call, it resulted in a rally in your stock in the last several months. The stocks have just been going through the roof. So I think what happens now is, in light of ASML and Taiwan Semi, TSMC earlier this week, people are bringing a little bit more scrutiny to the AI story. Is it as good? Is it as lasting as everyone thought it would be, as we expected it to be? It's not this miracle drug, after all, and that's what people are wondering. That what they're going to look at next week, they're going to scrutinize every number that these Magnificent Seven release, and every comment out of their CEOs and their CFOs to figure out, is this real? Is AI as good, as real, as lasting as we had been expecting? And I think there's going to be a lot of skepticism.
And of course, I'm sure a lot of these CEOs or their communications team are kind of going over their planned remarks and revisiting what they can say to reassure investors. What will you and your team be listening for to determine whether this AI story is more hype or more substance?
Are the products changing? Are you using AI in a tangible way to change your product? Is it changing for the end user, whether that's the consumer, whether that's the business? Are people really buying your AI story, or is this just some magic fairy dust you're trying to sprinkle on your results? That's the question that everybody is going to be asking into next week.
Now, the big question is, should investors buy Amazon stock before the company reports earnings on April 30? Amazon has started strong out of the gate in 2024, with its Q4 earnings report in February sending its stock soaring. This could happen again for Q1 this year, as analysts expect the company to post a 12% year-over-year increase in sales to $142.66 billion. As for the EPS, analysts expect it to rise 167% to 83 cents per share. Additionally, analysts expect year-over-year sales growth for AWS to accelerate to 14.9%, representing $24.54 billion in sales. That would give the cloud computing division 2 consecutive quarters of faster growth for the first time since Q4 in 2021. Amazon also recently started advertising on its Prime Video service, and this caused Jefferies analyst Brent Thill to raise his price target to $225 from $190 and set a buy rating for the stock because he believes this will boost the company's advertising revenues. Advertising is projected to remain Amazon's fastest-growing division for this quarter, with sales increasing 23.5% year-over-year to $11.74 billion. There's a lot of growth opportunities for Amazon, and Wall Street analysts expect Amazon stock to keep gaining. In fact, out of the 63 analysts following the company, 95% hold a buy rating. Keep in mind that Amazon is the market leader in e-commerce, as well as cloud computing through AWS, and it successfully used AI and its booming advertising business to boost its growth. Now, Amazon's leap into generative AI shows its commitment to innovation, and the potential benefits for its business are undeniable. Market analysts believe that generative AI will drive companies to spend more on cloud services, and since Amazon is the king of cloud services, it's obvious who would benefit the most from this trend. Right now, there are lots of questions to be answered, especially when it comes to competition with other cloud giants like Google and Microsoft. But one thing's for sure, Amazon's foray into custom AI chips and generative AI will be a massive move, and it could lead to some interesting developments in the field of large language models. So, what do you think? What are your expectations for Amazon's Q1 results? Let us know your thoughts in the comment section. If you would like to know more latest updates about Amazon and what it's been up to, then go ahead and click on the next video on your screen. See you there.